Welcome back to Investing Talk Podcast. Today we're taking a look at CEro Therapeutics. This is a company that really captures that high-stakes, high-reward feel of the biotech world. It's a clinical stage firm, pretty fascinating stuff, really. And our goal today is to kind of unpack what's going on with them, look at their science, which is pretty groundbreaking, but also, the very real financial tightrope they're walking. We want to give you the key insights, the strengths, definitely the red flags, and what you, our listeners, should probably be watching out for. And before we jump right in, if you get value from these conversations, please do subscribe, like, comment, maybe even consider buying us a coffee. Your support really does help us keep bringing you these kinds of deep dives. Okay, so let's get started. To really understand CEro Therapeutics, we need to know who they are fundamentally. What's their big idea? What's the science that's got people talking?
Right. So CEro Therapeutics, they're a clinical stage biotech. Their whole focus is on developing what they call next generation engineered T-cell therapies for cancer treatment, obviously. Their core idea, the thing that makes them different, is their proprietary platform. They're trying to essentially integrate both innate and adaptive immune mechanisms.
Innate and adaptive.
Yeah.
Can you break that down a bit?
Sure. Innate is like your body's first responders, the broad immediate defense. Adaptive is the highly specialized targeted response, the memory cells, that kind of thing. So CEro wants to combine aspects of both into single T cells. The goal is to make those T cells much better, much more effective at clearing tumors.
Okay, so building a sort of super soldier immune cell.
That's one way to think about it, yeah. Their lead product candidate that uses this tech is called CER-1236. It's an autologous therapy. That means they take a patient's own T cells, engineer them in the lab, and then infuse them back into the patient.
And what cancers are they targeting with CER-1236?
They're aiming pretty broadly, actually. Hematologic malignancies, so blood cancers like leukemia, and also solid tumors, which are often, much harder for T-cell therapies to tackle effectively. The company itself is quite young, incorporated back in 2021, and they're based out in South San Francisco, California.
So this tech, combining innate and adaptive immunity in one cell, what kind of potential breakthrough are we really looking at here? How is this different from other CAR T therapies we hear about?
Well, the potential here is pretty significant. It's about enhancing the body's own immune system in a really sophisticated way. Many existing therapies focus primarily on that adaptive targeted killing. By trying to bring in elements of the innate response they're hoping to overcome some of the limitations current therapies face, like maybe better recognition of diverse tumor cells or resisting the tumor's attempts to suppress the immune system. It's essentially trying to give the T cells more tools, make them more versatile and resilient in that hostile tumor environment. If it works, it could be a big step forward.
It definitely sounds like cutting-edge science, but as you know, in biotech, the lab work is only half the battle. There's the whole market reality, the funding, the news cycle. And CEro has had some pretty major events recently, hasn't it? Both good and, well, maybe more challenging.
They certainly have. Two things really stand out from recent months. First, and this was a big positive, in June 2025, CER-1236 received orphan drug designation from the FDA.
Orphan drug designation. Remind us why that's so important.
It's specifically for the treatment of acute myeloid leukemia, or AML. This designation is critical. It means the FDA recognizes the drug's potential to treat a rare disease where there's a significant unmet medical need. AML is a tough one, and getting ODD comes with real benefits. It can potentially speed up the development and review process, and importantly, it grants 7 years of market exclusivity in the U.S. if the drug eventually gets approved. That's a huge commercial incentive.
Okay, so that's a clear regulatory win, definitely something investors like to see. But then there was the other major event, the reverse stock split. That often makes people nervous. What was the story there? Why did they do it?
Right. That happened around the same time, June 13th, 2025. They did a 1-for-20 reverse stock split. The primary reason was straightforward: Nasdaq compliance. Their stock price had fallen below the minimum requirement to stay listed on the exchange.
So basically, consolidating shares to boost the price per share.
Exactly. It reduced the number of outstanding shares dramatically, from around 10.3 million down to about 500,000, roughly. Importantly, this doesn't change the company's total market value, just the price of each individual share. And it wasn't just about the share price. This move, along with some recent private placements, also helped them get back into compliance with Nasdaq's minimum stockholders' equity requirement, which is $2.5 million. So it was kind of a necessary housekeeping move to stay on the major exchange.
So you've got this positive signal from the FDA with the ODD, and then this more functional, perhaps slightly worrying signal with a reverse split. How did the market digest these two pieces of news coming so close together?
It's a bit of a mixed picture, as you'd expect. The orphan drug designation was definitely seen positively. It validates the potential of CER 1236, at least in the eyes of regulators, and points towards future advantages. That usually helps investor sentiment. The reverse split, though. While necessary, it can sometimes be viewed negatively. Investors might worry it signals underlying financial weakness or that the company might need to issue more shares down the line, diluting existing shareholders.
But it can also make the stock more attractive to some investors,
Right.
institutions.
That's the other side of it, yes. A higher share price, getting out of that penny stock territory, can make it easier for institutional funds to invest. So, while it might worry some retail investors, it can be strategically important for attracting bigger money. Both events definitely stirred the pot, though. You typically see increased trading volume around news like this as people react and try to figure out what it all means.
Okay, so the science is ambitious, they've notched a key regulatory win, but they've also had to make moves to stay listed. Let's dig into the financials a bit more. What does the balance sheet actually look like for CERo right now?
Well, as you'd expect for a clinical stage biotech with no products on the market yet, they report $0 in revenue. That's standard. Their whole operation is funded by investment, not sales.
So they're burning cash.
Exactly. They're heavily invested in research and development. For the last full fiscal year, they reported a net loss of about $8.3 million. That loss actually increased year over year, which makes sense as they ramped up their clinical trial activities for CER 1236. More activity means higher costs. Looking at the first quarter of 2025, the net loss was $5.5 million. Now, while that's still obviously a loss, it was actually a noticeable improvement compared to some previous quarters, so perhaps some signs of managing that burn rate, but still significant outflow.
Right, and that burn rate leads to something else I saw in their filings, that phrase, substantial doubt about the company's ability to continue as a going concern. That always sounds alarming. How seriously should we take that?
It is serious, and you're right to flag it. While it's a common disclosure you see in filings for many early-stage pre-revenue biotechs, it's not just boilerplate, it means exactly what it says. Based on their current cash position and burn rate, there's significant uncertainty about whether they can fund operations for the next 12 months without raising more money. They are entirely dependent on external funding.
So their survival literally depends on finding more investment, and soon.
Pretty much, yes. They absolutely need to raise additional capital in the near future. They did manage to raise $750,000 in June, and there's potential for more from that particular deal, which helps provide some immediate short-term liquidity. But that going concern language highlights the continuous pressure they're under to secure funding. It's a constant reality for companies at this stage.
Given all that, the lack of revenue, the cash burn, the need for funding, what does the market think it's worth right now? What's the market cap telling us?
As of mid-June 2025, the market capitalization was really quite low, around $4.4 million. That valuation speaks volumes. It clearly reflects the very early stage of their drug development, the complete lack of revenue, and crucially, the significant financial risks we just discussed. Other metrics you might normally look at, like price to earnings, free cash flow, return on equity, they're either negative or simply not meaningful at this stage. It's all about the perceived future potential of the science, weighed against the very real risk of running out of money before that potential can be realized.
Okay, it's a tough financial picture, no doubt. But despite that, there must be reasons why people are still watching CEro, reasons beyond just the science itself. What are the core strengths that make it maybe an interesting proposition for investors who have a high tolerance for risk?
The absolute core strength is their proprietary immunotherapy platform that focus on engineering T cells with novel mechanisms, combining those innate and adaptive elements we talked about. That's their unique selling proposition, scientifically speaking. Their pipeline, though currently focused on CER 1236, is built on this platform. So success with the lead candidate could validate the entire approach, potentially opening doors for other candidates down the line. And don't underestimate those regulatory milestones. Getting 2 INDs cleared by the FDA to start human trials is a significant step. It shows the preclinical data was convincing enough for the regulators.
And the orphan drug designation.
Yes, that ODD for AML is a major strength. If CER 1236 works and gets approved, that's 7 years of market exclusivity in the US is incredibly valuable. Plus, there are often financial incentives like tax credits associated with ODD development. It de-risks the commercial side somewhat, assuming they get through the clinical hurdles.
So, strong science, potential platform technology, and some key regulatory validation. But that has to be weighed against the risks, which sound pretty substantial. Beyond the immediate funding crunch, what are the other major risks listeners need to be aware of?
Well, the funding issue directly leads to the risk of dilution. When they inevitably raise more capital by selling more stock, it reduces the ownership percentage of existing shareholders. That's almost a certainty.
And the risk they can't raise enough money.
That's the existential threat, yes. If funding dries up, the company simply might not survive. Beyond finance, there's huge clinical risk. Early-stage clinical trials can and often do fail. Regulatory setbacks, unexpected safety issues, or the drug simply not showing enough efficacy, any of those could be devastating, especially since they're so reliant on this single lead asset, CER 2036, right now. The history of oncology drug development is littered with failures, even for promising candidates.
It really is a high-wire act. And then you throw in the competition. This area, cell therapy and immunotherapy, it's incredibly crowded and fast-moving, isn't it? Who are they up against?
Oh, absolutely. It's fiercely competitive. CERo is definitely an emerging player, a smaller challenger. They're competing against much larger, more established companies. Think about names like Fate Therapeutics or Adaptimmune Therapeutics. These companies have broader pipelines, often more advanced programs, and crucially, significantly more financial firepower.
And the really big players.
Exactly. You've got big pharma giants like Gilead Sciences and Novartis, who already have approved CAR-RT therapies on the market, generating revenue, and with massive R&D budgets. So CERo is trying to carve out a niche, differentiating itself by focusing on specific mechanisms or challenging indications like AML, but they're doing it with far fewer resources than many of their competitors. It's a classic David versus Goliath scenario in many ways. They need their science to be truly disruptive to make a mark.
Okay, so putting it all together, the innovative science, the regulatory progress, the precarious finances, the intense competition. For you, our listener, trying to track this company, what are the absolute key things to watch for? What are the upcoming events or data points that could really move the needle here?
The most immediate and critical things are updates from their ongoing Phase I trial for CER progress. But the real make-or-break catalyst will be the initial data readouts from that trial. Specifically, safety data: is the therapy tolerable? And early signs of efficacy: is it actually having an effect on the leukemia?
And positive results there could be amplified by the ODD status?
Potentially, yes. Strong early data, combined with the orphan drug designation, might open doors for expedited regulatory pathways, assuming the results hold up in larger studies. But conversely, negative or ambiguous data could be extremely damaging to the stock and the company's prospects. It really all hinges on what those initial clinical results look like.
So wrapping this all up, if someone is looking at CERo Therapeutics today, what's the overall takeaway message? How should they approach this company?
The bottom line is that CERo Therapeutics represents a very, very speculative investment opportunity. It's really only suitable for investors who have a high tolerance for risk and understand the binary nature of early-stage biotech big potential wins, but also the very real possibility of losing most or all of the investment. While the recent regulatory wins, especially that orphan drug designation, do provide some important validation for their approach, and you might see analyst price targets suggesting significant upside based purely on the potential of the pipeline.
But the financials cast a long shadow.
Exactly. The overwhelming financial uncertainty, the going concern risk, really dominates the picture right now. Because of that, the general view would likely be a hold. That recommendation would probably stay in place until two things happen. One, they successfully secure significant new funding that alleviates the immediate financial pressure. And two, we see initial positive clinical data emerge from that Phase I trial for CER 1236. For most investors, particularly those who aren't specifically focused on high-risk, speculative biotech plays, a wait-and-see approach is almost certainly the most prudent path until there's more clarity on both the funding and the clinical front. It's a story with potential, but the risks right now are substantial.
We've certainly covered a lot of ground on CERo Therapeutics today. From that really interesting science trying to combine different immune responses through the regulatory hurdles like ODD, but bumping up against those stark financial realities and the competitive landscape.
It definitely highlights the typical journey for a clinical stage biotech, doesn't it? It's often a long, challenging road full of potential pitfalls. But as that orphan drug designation reminds us, the goal is potentially bringing truly transformative therapies to patients with diseases like AML, where options are desperately needed. That potential is what keeps the field moving forward, despite the risks.
And maybe that leaves you with a final thought to consider. How do you, as an observer or potential investor, balance that immense, potentially life-altering promise of cutting-edge medical science with the very immediate, often harsh financial realities these companies face every single day as they try to turn that promise into reality? Thank you for joining us for this deep dive.